the bond market or the debt credit market is governor on the system because all of this future money is the future value of the dollar. When interest rates go up, those bond prices go down.
Are you ready to transform your life? This is a no-nonsense show helping immigrants like you create generational wealth, even while working full-time. Get ready to take notes. Here's your host, Saket Jain.
Welcome back, my Great to Wealth listeners. I am super excited to have the guest today that we have on. It's David Morgan. David, how are you?
I'm doing well, thank you.
Well, thank you again for taking the time and coming to our show. I know you're a popular guy. You have tons of Twitters that you're releasing every day. So appreciate you taking the time and coming on. David, in our show, we do things differently, right? One of the things we talk about is we don't introduce the guest. We usually let the guest tell us their migration story. And from that migration story, we'll tease out what you do. So with that said, what is your migration story, David? How did you get to do what you do?
Well, it's a long one. I'll try to be somewhat succinct, but I was always fascinated by money. I don't know why. But even as a kid, I just wondered, how does the economy work? How do we get these great big office buildings? Who pays for the roads and the schools? How does this whole thing fit together? I realized that money had a great deal to do with it, but I couldn't fathom that. The only way I knew to accumulate wealth as a 10-year-old kid was savings, right? You get paid something for some type of activity, job, whatever, and then you save that, and based on that savings, you could buy something. Didn't know about debt, didn't know about credit, didn't know about anything, but was fascinated by it. So when I was 11 years old, I used to get 25 cents a week to keep my room clean.
25 cents a week. Wow.
25 cents a week. So I was only 11 years old, and the coinage changed. It went from silver quarters, which I was getting one a week, to what I call the Johnson slugs. They looked silver-ish, but they weren't made of silver anymore. And that, to me, struck a note. I thought, what's going on? But none of the adults seemed to care about it.
How back was we will not guess your age, but how far back was that?
I'm 70 years old. That happened back in 1965.
Got it.
So I thought about it, but not a whole lot. But I kept on this course of studying about money and economics on my own. And then when I got in 8th grade, I learned about the Constitution, and only states could take gold and silver for payment of debts. So I raised my hand. Well, that's not true. Of course, the teacher couldn't answer my question. So that was kind of my passion. And it evolved into what I'm doing now. I've done several things in the field. I certainly had a pretty strong career in the aircraft industry. Mm-hmm. Along with that, I was working for a financial planner. I had a real estate license. I had an insurance license. I never did the Section 7 stockbroker license, but real estate and insurance. So I had a real strong background because I was so passionate about it. But what I discovered early on, around the 8th grade level, or maybe slightly before, was that the system is based on a lie. They're creating something out of nothing. They're basically printing money. And once I learned that, it was a big wake-up call. And I remember talking about the Federal Reserve being a private corporation and just being blown off because this was pre-internet, and anybody that had the least bit of outside-the-box thinking was discredited almost immediately. So I went through that. But I just basically followed my gut instincts, my passion. Really, I followed my passion. And my idea was that there used to be sound banking, and we should go back to sound banking. And if we did that, then we would probably have a better society. And there is a direct correlation. I learned this later, although I think I intuitively understood it, that there's a direct correlation between the honesty of the monetary system and the social morals of the society. So quickly, I've said this in other interviews, but there's a direct relationship between the Roman Empire, starting off in the silver denarius, and having a very sound republic where everyone basically got along, had a strong society, and the moral structure was high, to the end of the Roman Empire, where the Senate basically was there to get all they could get while Rome burned, and there was mistrust throughout the social structure. So there is a correlation between being true to your system monetarily and the high moral structure. So, and that's provable beyond Rome, but that's one most people can relate to. So I did a a bunch of things, but when the internet came around, I thought, aha, here's my opportunity. And I didn't say I'm going to get into the financial newsletter industry. What I said was, I'm going to build the best research site on silver that exists, just for me, really. And when I was getting I have to back up a second. When I was getting my finance degree, the professor that had the most clout, she invited me to her house to do some wealth planning. She basically was a certified financial planner and wanted me to basically, turn my savings over to her for her management. I didn't do that, but we had a great conversation. And of course, I was a hard money advocate, basically from age 11, although I didn't know it.
Yeah.
I only know that looking backwards. So we were in our finance class, and she said to the class, well, we have a silver expert in the room. Gee, I never thought of myself as a silver expert, right? But that's how she related. So when the internet came about, I thought, I'm going to do this site, and I did. And someone got on there because I had an email, and they said, what's the Silver Guru do? And I take the Silver Guru moniker as tongue in cheek. I don't, pretend to be better than anybody. It's just a catchy name. I use it for an email address. Anyway, he asked what I did, and I said, I write a newsletter. And he said, great, how much is it? And I said, well, geez, I've been in business for about 12 milliseconds. What do I tell this guy? Okay, $60.
Right.
And he said, okay. And I gave him the details, where to mail the check. And I was levitating. I've meditated for a long time, but I was so high, natural high. I was like levitated off my chair. I'm exaggerating, but I was high.
Right.
And then all of a sudden I had that extreme opposite emotion. I did the one-handed clap. I go, wait a minute. What did I just do?
Now you just found yourself in a job.
I'm going to write everything I know about precious metals and the resource sector for 1 year for $60. That does not sound like early retirement.
Yeah.
But I was committed. One client or 100,000 clients. The beauty of the newsletter business is it scales so easily.
Right.
You write one report and you can sell to 10, 100, 1,000, 10,000, whatever.
Correct.
So I had 4 people at the end of that month. And at the end of the year, I had about 100. So you could do the math. I made about $6,000 my first year in business.
Mm-hmm.
But I had savings. My wife was working part-time. I had low debt, so I was able to accomplish this. So I don't know how much more detail, but it took off from there. And, the first 10 years were a storybook, Cinderella story almost. Silver and gold were the best places to be. Gold went up 11 years in a row. I was going all over the world, speaking in different countries, on TV in Singapore and different places, on Canada TV, US TV, wrote books on silver. But I never really let it go to my head. I can say that looking in the eye on the camera. And I kind of knew, one, that all markets go up and down. It's only going to last so long. And I tried to maintain my warrior attitude of control over myself. Well, real warrior battles themselves, not outside forces, although that could come into hand once in a while. Regardless, I said, I'm not going to get too high when things are high or too low when things are low. So I've had about a 10-year run from 2000 to 2011, and then from 2011 to 2022, another 11 years. It's been pretty much downhill for most of the precious metals investors. Yeah. Although I do truly believe that's turned around. So probably a very long introduction, but one more thing I want to make a point of, and that is so involved in honest money, the hard money movement, whatever you want to call it. So I started becoming a newsletter junkie. So I read every newsletter, subscribed to every one that was out there, from the good to the bad to the okays. And so I got a good feel for the industry. And I found out how much it varied. And the price was not a very good determination of information. Usually if you pay more for a suit or some goods or service, usually if you pay more, it's better. In this business, that's not true. So I learned that. So I started to play catch up because I had bought physical gold. I had bought a little bit of silver. And I was into the penny stocks quite heavily. And I realized after the fact that's a good way to go broke. So all my friends that are working all this overtime like I was are driving Corvettes and maybe getting their first rental house. And I'm saving. I'm going to make it really big in the gold and silver mining business, stocks. And I fell on my butt. And I want to get that out there because a lot of people still under the misimpression that the way to really make a lot of money in gold and silver is to use the leverage of the mining stocks. That's partially true. And then they're geared to the what I call the penny dreadfuls, the penny stocks. And if you want to go broke, that's where you want to go. Yes, you can make large money in penny stock, but you have to know what you're doing and do it right. So I'm done. Thank you for
No,
that.
David, this is actually, there's so many nuggets in there, right? I'm trying to wrap my arm around where do I want to poke, because I know everything that I start is going to lead into a conversation. So I think the thing that I really want to ask is, I think it's an opportune time for that discussion, which is, where do you see precious metals play a role in people's portfolio right now? Right? Because, of course, it saw a 10-year up and it saw a 10-year, 11-year down, right? So going forward, where do you see? And I think maybe we take a little bit back, maybe take several back steps as well, because I know I heard it from you directly, what happened to gold between 1925 and now, right? Where it is now. So how do you see it? If you can wrap our brain around, because of course we don't want our listeners to go crazy on any single investment.
Right.
We want to make sure that it's diversified and its point of view, and they're looking at investments correctly. Is it really an investment? Is it really a cash hold? Is it really a storage of money, storage of value? What exactly is gold or precious metals in general?
Yeah, excellent question. I would say you can put whatever label on it. I mean, some people call it, most I think that really study gold look at it as wealth preservation.
Mm-hmm.
But you could call it an investment. You could call it a speculation. I mean, you can buy options on futures. That's obvious in gold. That's obviously a speculation.
Mm-hmm.
But when we're talking hard money, physical gold coins or something like that, that's a wealth preservation technique. Gold is universally accepted. I mean, even the test pilots, or excuse me, fighter pilots,
Mm-hmm.
have in their survival kit a gold coin. And I give them $100 bill, and I'll give them a bunch of yen. They give them a gold coin because no matter where they bail out, it's in Vietnam or Canada or Mexico or wherever, they've got water, food, shelter, and a gold coin.
I actually did
So,
not know that. That's an interesting insight. I actually didn't know that piece of information.
yeah. So the number one idea about investing is diversification. That's probably the first idea. And the second idea is, what is the best mix to own?
Right.
So you have people that are all precious metals, people that are all biotech, people that are just stocks, people that are just bonds. And of course, mathematical study proves that if you have the right diversification, you're going to do the best in all market conditions because life changes. Mm-hmm. So if you do the couple of studies that I'm well acquainted with, the Ibbotson and Associates study, it recommends, or I don't even recommend, it states flat out, black and white, you should have 15% allocation to the precious metals under all conditions. So good times, bad times, horrible times, extremely wonderful times.
Right.
Your portfolio will do the best with that percentage. CPM Group, which is a Wall Street house that specializes in the resource sector, writes a yearbook on almost all the metals: platinum, palladium, gold, silver, copper. They do them all. Jeff did a study from 1968 onward, and believe it or not, it's a big number, bigger than I recommend, that if you needed a 25% weighting to gold from 1968 to present day for the best overall portfolio balance. But I want to back up because I know you do a lot in real estate. And here's one story that I think your viewers will really like. So way back, I forget what year it was December of 2008. There was a gathering in the Yukon called the Gata Gold Rush 21. And at that meeting, we had all kinds of people from all over the world talking about gold and what's the gold future look like. Mm-hmm. Well, one of the people there was a friend of mine that we didn't know that each other that well, but his name is Mike Maloney. Now, your listeners may not know who that is, but it's easy to find him because he's written the bestseller on gold and silver investing above anyone. And he runs the website goldsilver.com. But Mike asked me to breakfast the last day after the event was over, the day we were leaving. So I had breakfast with him, and he told me he wanted to go into gold and silver business as a dealer, as a bullion dealer. And he kind of gave me his dream. And he asked me for advice. And there's only one bit of advice. He said, no matter how much we love gold and silver, no matter what we believe about it, when you're in the gold and silver business, hedge every transaction you make. Don't let your emotions get in front of you. Because if you do, you probably won't stay in business. But if every time you make a sale, you hedge it, so no matter which way the market goes, you're in business. And because of that, you'll make money because you're not betting on a movement in price. You're keeping it stable by your hedging. And I know he took that to heart. So what he did on the flight back, which was quite long, was I'm talking to John Embry, a money manager for Sprott, great guy, and we're yakking away about the economy. Mike is writing a letter to Robert Kiyosaki because Mike realized that the real estate investing community had made a lot of money. They were sitting on a great deal of wealth, but he also knew that that turning point was just around the corner. And most real estate investors, whenever you're winning, it's not, you feel good, you have more money, you're more generous, all those things that go hand in hand with it. And very few will see the top.
Right.
Or a lot will just make, and it's true in the precious metals. I'm not picking on real estate investors, but real estate never goes down. Well, yes, it does. But so Mike
we heard
caught
that
that
story.
sweet spot. He was going where the puck isn't,
Right.
And he wrote this letter, and Robert picked up on it. And Mike started lecturing with Robert Kiyosaki, Rich Dad, Poor Dad, and started telling all these real estate investors that we're near top of the market. And even if we're not, these are my words, not his, you should take some profits. And the best place to put it right now is in the precious metals.
Yeah.
And he couldn't have been more correct.
Wow.
And so he opened up a whole new market, basically, because to get one, let's say, tried and true asset class investment community to move into a different one takes work, convincing, of course. And he had those. But I thought it was brilliant because, we in the precious metals community live kind of in an echo chamber. I mean, everyone that's buying gold now, not everyone, but a lot of them are already convinced why they should have it. So they're going to buy a little bit more or whatever. But take someone that's a tried and true real estate investor to point out what the gains have been. They're sitting on a bunch of profit. Why not take some of it and put it into an asset class that you've never thought of? And he would do these lectures. And, I've been on the speaking circuit with him. We're friends. And I get, 5, 6, 7, 8 people around my booth, and that's right. You couldn't get near Mike's booth. I mean, it was like 5 people deep. I didn't count them, but 50, 60 people. And they patiently waited. I mean, the people would wait there for an hour or so just to be able to ask him a question because these real estate people really were hungry. So I really wanted to get that story. It popped in my head on a very brief pre-interview we had for just a few minutes. But I thought, man, this is the story because...
No, this is actually amazing.
They loved him. I mean, can you imagine you're sitting on, I'll just make up a number, $1 million in profit and you sell 3/4 of it and you buy gold pretty much at the bottom and you ride that all the way up. And I called the top in gold or silver in 2011 and gold wasn't far behind.
Right.
But so there's 2 ways to look at it. One, there's a time to invest in it, which is forever, just a small portion of your portfolio. It's wealth preservation. No matter how bad the economy gets, it's always going to be protecting your wealth. That's one way to look at it. And that's probably the easiest investment.
Yeah.
The second way to look at it is looking at it the way Mike does, which is cycle theory. There's a cycle to life. There's a cycle to the investment world. And it's sometimes you should be in stocks and sometimes you should be out of stocks. Sometimes you should be in real estate. Sometimes you should lower or get out of real estate. And same thing in the metals market. So I'm very long-winded, but I think you enjoyed that story. And I'll say now the summation is we're there again. We're at that point in the Mike Maloney story where people should look at where they're at. And now they're kind of licking their wounds because the real estate market's coming down, the stock market's coming down, the bond market's coming down, and gold's staying put, basically. It's like it started the engine at the start of the Indy 500, and you can hear that engine roar, but it really hasn't got on the track yet. But it's very close to doing it. So I would highly recommend that people study on their own, make their own investment decisions, but take a good look at the asset class last year that did nothing. Gold year over year basically stayed flat. But compare that flat wealth preservation to how far down the S&P 500 went, what the bond market did, what the real estate on aggregate did. And what you'll find is all those lost rather significantly and gold didn't. So that's the point. I'm sure I've generated some more questions, but
No, I love that
I'm
point.
not
Right? I
a,
think
I'm sorry I talked over you,
no, that's
but I'm
okay.
not a rah-rah gold solves everyone's problem. It's the only asset class to own and any of that nonsense. It's a reason for owning it, which you've already discussed. There's a reason to maybe increase your percentage for the
Hmm.
reasons we discussed, but it's not a religion that it does become for some people. And that's
Yeah.
unfortunate, but there's probably people that are religious about real estate. I mean, the ones that say it never goes
Hmm.
down, I call them somewhat religious fanatics. But anyway, back to you.
Yeah, I think this actually makes sense, David, what you just mentioned. Right? I think it actually resonates very well with me. I think the message that we've been talking to folks about, that no one asset is going to fix all of your problems. In a certain point in time, an asset's going to address an issue that's happening at the macro level. But that does not mean that every asset cycle is going to see a cycle up and down, right? What's going to go up is going to go down, then it's going to come back again up, right? So, but no one can time it, unfortunately, right? So I think that one of the approaches you were talking about is gold is actually an asset like that, where if you just consistently keep a portfolio off that, which is 5, 10, 15, I tell people about 10% in gold always. Could it be 15? Could it be 5? I think it's all debatable. 10% is a
Sure.
number that I usually use in gold, and actually precious metals, not just gold, to give you that protection, right? Should certain things happen in the world, you have an option to survive, right? You have an option to put food on the table, because nothing in this world is out of the realms, right? It's just a matter of, is it a 50% probability or 100% probability? Everything is a probability game. So there's always a likelihood of something happening. And I think your one thing that you probably didn't mention now is, but you've mentioned it before, from 1925 to now, the gold has consistently grown about 4%, right? On an average.
4.5% compounded.
4.5% compounded,
Yeah.
right?
So if you go from the 1925 price of $20.63 an ounce, now it's over 1,800. So you have a 90-fold increase,
Right.
90 times. So what's changed? Well, what's so interesting, that ounce of gold remains the same. It
Yeah.
didn't change at all. It's an absolute 100% constant. That
Correct.
$20 gold piece back in 1925 is exactly the same as it is today.
Yeah.
But what changed?
Your
The
dollar
amount of
depreciated.
currency debasement is
Yeah.
what changed.
Correct. So I think that's what I like about the having gold in the reserve, right? Because I think
Sure.
people start to compare that, oh, I can make 20% return on real estate. I can make 10x in a stock, which is all good. We're not debating that. That's a different conversation. What we're now saying is that if you start looking at gold as preservation of wealth, it's equivalent to money. It's equivalent to cash that you can use if you needed to, right? So that's one way to look at it. But again, your way is another one. Mike Maloney's way is an amazing way too, that if you actually time it well, it could also serve as an investment. But it's an
Exactly.
also, it's not an and. It's really, what we're basically saying is the crux is, the foundation is preservation of wealth. But if you time it well, you may get lucky as well, right?
Yeah.
But if you're consistently buying it, doesn't matter what cycle it is. It's like dollar cost averaging your S&P index or a stock market fund or something like that. It's really just like that. Continue to buy gold, up or
Right.
down, as long as it stays within a portfolio. Don't overweight it. Don't underweight it. Pick a number,
Right.
10%, 5%, and stay within that realm. You'll be fine.
Yeah, I could add on to that. I'll try to be brief, but one of my mentors that I really appreciate is named Harry Brown. He was a libertarian candidate for president of the United States a couple times. And he wrote a book called The Permanent Portfolio. And it was very basic. It was like bonds, it was stocks, it was precious metals. I think he might add real estate, I'm not sure. So we'll just use stocks, bonds, and precious metals. And what you did is only once a year, you would take a look and you would see, okay, my bonds did this, my stocks did this, and my metals did that. So anything that was overweighted because prices change. So let's say you had a really good year in bonds. It's now, instead of making up 60% of the portfolio, it made up 70%. So we would sell off that 10% and put it in the area that was weak. Let's say metals were weak that year. Instead of making up 10% of your portfolio, it was down to 5%.
Right.
So you'd move the profits out of bonds into the metals and rebalance the portfolio only once a year. And that thing kicks butt. And it's that simple.
It is so funny you say that, right? David, what I always tell folks is stock market goes up and down not because it is supposed to go up and down, it's because it's driven on emotions, right? And people see Tesla going up, they want to jump in Tesla. People see Tesla going down, they want to jump out of Tesla, right? They're not buying because they have strong fundamentals. They're buying because they want to chase the price, buy or sell, because they're basically just price dependent. That's it, nothing else around it. And what your mentor, Harry, told you really is, if you just look at it once a year or twice a year, whatever, fix the number of time. I think the message there is not to look at it hour by hour, day by day, because you're going to make decisions based on emotions. There's just no way around it. But if you pick the assets correctly, if you structured your portfolio correctly, you should have bought stuff because you believe in the fundamentals, right? So unless those fundamentals get shaken up, there's no reason to make trades on a day-to-day basis.
Yeah,
so David,
I mean, sometimes being elegant like that, simple and elegant. I mean, especially, for most people. I mean, most people are too busy to sit there and manage their own portfolio.
Correct.
They take in, this is the information overload age. It's not the information age, it's the information overload. You didn't even know what's real information, what's fake news, what's, and some of the stuff's deliberate, some isn't. I don't want to go down that road, but keeping it simple and sincere. And I mean, that's what he did. And it lets you relax because you get the emotion out of it. Once a year, you do a score and say, oh, this is outperformed, this is underperformed, and you rebalance it. And it's amazing the results on something that's simple.
It keeps you calm, right? Part of that is it shouldn't be stressful. It shouldn't be stressful.
You're supposed to invest to have a better life.
Right.
Or forego maybe present day consumption so you could have a nicer retirement or a better car later or whatever it is. And you shouldn't stress about it.
No, I agree. So David, let's shift gear a little bit, right? Let's talk about the current market right now. So what's happening in gold? Because I think at gold at some point couldn't cross the ceiling of it went all the way up to 22-ish. I can't remember the exact number. Then it dropped all the way back to 17. And now it's hitting that 1850 ceiling again. So where do you see it going, right? And more importantly, I don't care about the number. Does it become 1900? Does it become 22? I care, but that's less important. What's more important, what's happening in the macro that's making it move, right? That's one. And I'll ask a few questions in series because the answer will be combined. The second is going to be the Bitcoin, right? I mean, there's a whole debate about Bitcoin being gold 2.0, right? And now I see both of them being correlated. As the gold starting to go up, the Bitcoin's also going up. As the Bitcoin went down, the gold also went down, right? Not by the same proportion, but they're both a downward trend. So help us understand what's happening in the macro right now, especially with the conversation of Chinese yuan becoming the world currency because the petrodollar may change to petro yuan. There's so much discussion that's happening. The dollar may end up not being the world reserve. Now, will it be there? Will it not be there? I don't think we need to pontificate on that because that's a different conversation. But how does that how does this conversation, that sentiment affect gold and silver?
Okay, first broad brush statement that's very important. It's so obvious that people say, oh, I'm wasting my breath. But all markets go from undervalued to fair valued to overvalued.
Mm-hmm.
So that's true in real estate, stocks, bonds, precious metals, baseball, trading cards. So we're in a situation where what's overvalued? Stocks are overvalued, bonds are overvalued, real estate's overvalued, and what's undervalued? In the theoretical paper price of gold, it's extremely undervalued. How do you determine the true price of gold? Well, you can't, but I'll give you my logic. So if you look at M0, base money it's called, because I don't look at gold as anything but money or preservation of wealth. It's not multiplying. Gold cannot create interest. You have a gold coin, it's the same ounce, in 2023 as it was in 1925. So if you look at the base money supply and you divide it by the amount of gold that there is supposedly in the U.S. Treasury, which is roughly 265 million ounces, if you do that simple arithmetic, gold comes out to $20,000 an ounce.
Okay.
So that would suggest that gold could go up basically 10 times from here to make it equal to the amount of printing that's gone on for the last many, many years. Now, I want to digress because this is more important to make the point. If you use the same math in 1980, when gold went to 850, you could have a complete 100% gold cover clause at $400 gold. If you took the amount of gold in the treasury, which was still about the same, 265 million ounces, and he took the dollars that were in circulation, the base money supply came out to 400 an ounce, yet gold went to 850 an ounce. So that's an overvalued market. Remember, I said it went from undervalued to 35 an ounce, fair value to be 400, and overvalued was 850. Well, that suggests that gold could even go above 20,000. Now, I'm not predicting it's going to 20,000. I'm just proving my point, or making a case for my point.
Yeah.
That gold is an undervalued asset relative to the money supply, real estate, bonds, or stocks. So because of that, you're getting a bit of a gift here. Of course, people are going to say, well, wait a minute, David, $1,800 is a heck of a lot more than $300 when you started your website and told everybody to buy gold. And I wish I would have listened to you then, because I'd be up 600% now. But the truth of the matter is that gold priced at 1,800 now is similar to gold being priced at 300 then. Why? Because that's been the increase in the money supply for that last 20 plus years. That's why.
Yeah. So how does one think about it, right? So now we're talking about, I know that a lot of money has been printed over the last 2 years. Over 40% of the entire money supply has been printed in the last 2 years, right? Now, I also know there's a whole conversation around tightening that, right? Now, I don't know if that would mean to take the money supply out of the market. I don't even know if that's even possible or not. So are we saying that the money supply, the M0 stays constant at this point? Or you are now thinking that we're at a point where it cannot stay constant, it's going to continue to go up?
Yeah, that's a great question. Well, traditionally, if you study all the great inflations, anytime you've been on a non-backed currency, they hyperinflated away.
Right.
So the odds or probability is highly favorable to the fact that the U.S. will try to hyperinflate the debt away. However, the way the system is set up, as much as I'm for sound principles, the bond market or the debt credit markets, however you want to refer to them, I like to call it the debt market, is a governor on the system, because all of this future money, which is a bond, a T-bill, a T-note, a T-bond, is the future value of a dollar. When interest rates go up, those bond prices go down. So that's highly deflationary. So for an example, let's say the bond market's been, I don't want to say decimated, but it's certainly been hit hard. So we're at whatever we are, 4.5%, I think, at the federal funds rate. Let's say it doubles. Let's say you get up to 8%.
Right.
I mean, that would take a lot of money out of the system. So that would be highly deflationary. And what would that do to the base money supply? I'm not sure, because base money is basically physical cash. But nonetheless, it'd have huge repercussions in the real estate market that really be decimated. And almost everything's on credit. I mean, most of your big conglomerates, your big chain stores and that type of thing, they don't have the savings or the cash flow to sustain. They've got to go into the debt markets and say, well, we had a bad year. We're only down 17 million because it's a $50 million business. So they go to the bank, they make up the money, they keep paying their employees, expecting a better year, and maybe they come back. But without credit, then the whole system will seize up. This is what, and I don't mind throwing out others' names. Whenever you do an interview like this, people stop listening to us and they look up the guy we're talking about. But Jim Rickards does a good job about Ice 9, the Kurt Vonnegut story, where this theoretical ice just freezes everything instantly. And he talks about the debt market or the credit market doing that. And I think I'm not saying it's going to happen, but it's a really good thought experiment for the fact of what I just said. If there's a big problem in the credit markets, basically economic activity comes to a standstill. Now, again, I'm not predicting that. I don't think it would, but we have a tendency to take today and project it into tomorrow too often. I'm not a gloomer. I'm not a doomer. I'm a realist. I've studied monetary history. It's my passion. And there are times when we have a contracting economy, which we do, they try to print money to make up for it, and the end result is not good. And people that have precious metals in their possession during those time frames have always done better than people that do not.
That's amazing. So I think if I may distill what you basically mentioned, I think the messaging is we as a consumer, we can't control what happens to the monetary policy. That's out of our realm. Now we can choose to pick the right leadership, but that's really where our control really ends. And even then, I don't think we have a whole lot of influence on the Fed. So, but given that, what we're now saying is no matter what happens in the economy at the macro level, owning precious metal is a hedge against protecting you from the repercussions of that. You may not be able to excel, but you won't regret not having it. Is that a correct messaging?
Absolutely. I mean, if you look at legacy wealth, the super rich, what do they invest in? Real estate, art, and gold.
Pretty much. Yeah.
That's it. I mean, it's not rocket science. Real estate, I mean, the expression in Europe, as you probably are well acquainted with, is never sell the mud.
Correct.
I mean, if you own a city block in outside of London, what's on that block right now is different than what was on that block in the 1800s. I guarantee.
Of course.
It.
Of course.
But if you were still owned that land, the mud that buildings sit on, you've got legacy wealth.
Yeah. So, David, help us understand how to look at gold and silver, right? Because I think these are the two most commonly, of course, there's platinum, palladium, there's other asset classes as well within precious metals, but the most talked about gold and silver. So give us a perspective on kind of like how to look at these in relation to each other, and does one affect the other?
Okay, first part, I'll answer your last question, and that is how correlated are they? And gold and silver are correlated about 85%.
Okay.
So there's nothing that correlates to anything else except itself. In other words, there's nothing that correlates to gold 100% except gold.
Mm-hmm.
So, but 85% is a very high correlation, which already answers the subset question. Like, well, gold does good in a deflation and silver only does good in an inflation, and gold does bad during this time and silver does good during the war frame. And no, they're 85% correlated, which means all of the conditions economically in the physical economy, what's going on geopolitically, well, all that stuff is factored into the fact that these two are highly correlated. So the way I think of gold and silver, I think for most people is a good analogy. And that is that gold is the Dow Jones Industrial Average and silver is the NASDAQ. So when we had the tech wreck in the NASDAQ, I mean, the NASDAQ went down like 80%. People, stocks for the long term, well, okay. But if you bought this Dow at the top of 1929, you had to wait till after the war ended to break even.
Correct.
So, I mean, these are realities that people don't like to talk about. If you had gold during that period, you would have done quite well, but gold was outlawed. So what did you do? You bought Homestake or Dome Mines. And Homestake went up multiple times and paid out dividends that were so strong that the last year of owning Homestake, you basically got your downstroke. David, what's your downstroke? Right. I put $10,000 in the Homestake, and the last year of operation, I got $10,000 in dividends. So that's a bit of an exaggeration. We're getting the idea. So I look at silver as more important than gold as far as what its abilities are. But gold only really has one or two purposes. Gold's purpose is money or jewelry. And of course, in the East especially, jewelry is used as money.
Yeah.
You don't see that in the West, but in the East, you could barter with a necklace or a ring or whatever. So silver now was the monetary standard of the world for quite some time. And we were moved away from that for a gold-only standard. And I won't go into the reasons why. But the monetary basis of silver has basically been destroyed. It's been relegated to be an industrial metal only. It really is both still. I mean, the 14 Romance languages, the words silver and money are synonymous.
Right.
It's not gold and money, it's silver equates to money, which is something to think about. But the high-tech society that we live in absolutely requires silver. It's essential. There's no substitute. It must be silver and nothing else. I mean, in a few cases, you could substitute something for silver, but that's usually gold or platinum or palladium, which are much more high cost on a per unit basis. So if you had to substitute for silver, would you take something that cost 80 times more to substitute? No, you wouldn't make a substitution. You want to find something cheaper. And you can't. And copper is cheaper than silver, and it's a good conductor, but not as good as silver. If you said, I'm going to make my cell phones and not going to use the silver, I'll replace it with copper, you'd be out of business instantly, or not within a year, because it doesn't have the qualities for conductivity that silver does. So I think silver is going to become a legacy investment, if and only if I'm correct in this assumption, which is it's hard to make now because of how tense the world situation is. But if we continue on the same trends that we have already established for industrial use of silver, solar panels, anything electronic or electrical, water purification, medical use, biocide properties, in clothing, the projection would be that we don't have enough silver on an annual basis to fill all those demands. So that suggests that we will be starting to run low on silver and start to eat away the above ground stockpiles if Tesla wants to stay in business, if the iPhone still wants to manufacture, if Samsung still wants to be a conglomerate. Those companies will see what's coming at some point, and they'll probably move into the silver market and warehouse it just to be able to stay in business and assure price stability, or their production lines won't stop. Once that takes place, and this is a conjecture, it's not, David said, I'm not saying it's going to happen, but it is likely to happen at some point. Then that run is started, because if Tesla gets wind of Samsung stockpiling silver, what are they going to do? Well, they're going to stop
exact stuff
because they got Solar City, they've got Teslas to build, they've got, and that would really open the door, because very few commodities have a dual demand. Not every commodity has a demand of industrial and monetary. And when you think about the monetary demand, which will go hand in hand with the industrial demand, the monetary demand is infinite. It goes to infinity. Why? Because if you believe that you're in India and the rupee is going to go to zero, or you're in Mexico and the peso is going to zero, or you're in the US and think the dollar's going to zero, what are you going to do? You are going to run out of your bank and into gold or silver.
Correct.
Oh, you could run into lumber, and you could buy, barrels of water, and there's a lot of things you could do. But the majority, they're going to go funny money to real money as quickly as they possibly can.
It's kind of funny when you say that, right? Because most people know the answer, that silver and gold is the real money. But then, of course, when everything is going up and everything is hunky-dory, no one cares about the real money. Let me just collect more of that fake money. And you talked about one of my mentors, Robert Kiyosaki. I mean, he wrote a whole book about funny fake money, right? Yep. And that's all he's trying to talk about, is that money in his existence, in his reality today, is not real. So, David, I know I love talking to you and hearing this concept, right? Because it can never get old. Because this is what makes the basis of our show, that we want to change people's migration patterns, right? Kind of like what they're doing unintentionally, which is working 9 to 5, investing in stock market. While it's fine, there's a place for that, as long as you know the real story behind it. And once you know the real story behind it, you cannot not change. The change is going to be obvious. You'll be looking for answers. And once you're looking for answers, the answers will show up. The problem is most of us spend our entire life not looking for answers. We're saying whatever's being served on a plate is the only reality, right? And that's what I loved about your conversation, because you're bringing the history, you're bringing the concepts, you're bringing the logic, you're bringing what have you seen in your life and in different empires. Because right now, dollars is the reserve. There's no guarantee dollar will be reserved, right?
That's right.
And what happens around that? So we have to, may not happen in our lifetime, or it may. Nobody knows, right? Because it has happened in the past doesn't mean it won't happen again. So I think things like that. So I love that conversation. Thank you again for bringing your insights. But I want to be respectful of your time. So we're coming towards the end of our show. We usually end with 2 questions. So I'll ask the first question. if you go back to your younger self, your 19, 20-year-old self, what is one insight that you'll share with that person to make their migration in life more intentional?
Oh, probably three things. And this
Yep.
is what I've applied pretty much from that age. Number one would be to be a lifelong learner.
Mm-hmm.
And with that, being a lifelong learner is you keep open-minded. Parachute only works when it's open. Now, you don't want to be so open-minded that your brain falls out. So you have to use discernment. But that would be one, be a lifelong learner. Number two would be health above wealth. I mean, no matter how much wealth you have, if you don't have your health, you don't have very much. So that would be something that I would tell myself, and I pretty much followed that advice from that
Mm-hmm.
age on. And the last one would be what my dad told me before he died. And that was everything's going to be okay.
Yeah.
It's not a big statement and it's not very insightful, but it's that life has its ups, its downs. It's got its joys and its tragedies. It's got its pains and its beauty. And that's all part of the big picture. But in the long run, it's okay. Everything is okay. We're just here as an experience. We're souls that are in this body. And a lot of life is what you make it. Maybe that would be the fourth one.
Correct.
The idea is have a nice day. I almost always say make a nice day. Because we do not have a lot in our direct control. But we can control our attitude. And anytime you're having a bad day, you could take 2 deep breaths and say, you know what? Nothing I can do anything about that. The rest of my day is going to be a good one. Now,
I love that.
not too many people can actually do that, but it can be done. The possibility is there. So thank you. I actually went on a bit of a run. I was almost stumped.
This is amazing, David, because I loved especially the last one, right? Because it's kind of, I don't even know if you did that or not, but I want to share. When I said, are we ready to go on live air, you're probably the first one who actually closed his eyes and took a deep breath. Most people grab their water, or, they're like, oh, do I have everything ready? But you actually centered yourself, right? So can it be done? It can be. I know podcast is not new to you. You've been doing a lot. The concept you're sharing is not something you're stressed about because it's second nature to you. We actually did it. So I think part of that is just, if you make that as a habit, it'll happen. If you only do it in stressful situations, it'll not come naturally to you. But if you make it as a habit, it probably will. So thank you for sharing those insights. So the last question, we're going to take a little bit of higher perspective, is in what's one wish or desire you may have for humanity to migrate towards?
Yeah, that gets to my mission statement. And my mission statement actually doesn't have gold or silver in it.
Mm-hmm.
My mission statement is to teach and empower people to understand the benefits of an honest monetary system. Because if we had honest money, we'd have a high moral structure like we talked about at the beginning.
Right.
And when everyone gets along, or more reasonably, there's less conflict because you have something that's very trusted.
Mm-hmm.
If you can trust the money, have honest weights and measures, the human interactions are far superior to when everybody's trying to chisel off of everybody else for that extra profit. I mean, there is inflation. There's no doubt about that. But there are instances now, and there probably were past, it's more prevalent now, that some corporations are taking advantage of this inflation problem. And instead of jacking up the prices on a specific good, they're doubling that because they're going to get away with it. And this gets an inflationary spiral going, along with other things. The printing of the money is part of it, of course. So my wish for humanity is to have trust in the system, across the board, worldwide. And I think if you have an honest money system and a trusted one, we're more mindful about what our spending habits are.
Right.
I can't prove that, but I know as a kid when I had to spend those silver quarters, I thought a little bit more of it than when I had a piece of plastic and I could just buy it now and pay for it later.
True.
And I think there needs to be something to that, coming back to a situation where we're actually in a contracting economy now. It's hard for a lot of people to understand, but we are. Global economic, physical economy is contracting. All that means is there's less wheat and there's less, rice, and there's less building going on and all that. So I don't want to belabor it too much, but my wish would be for everyone to be happy, joyous, and free. And one way to get the freedom is to have an honest system, an honest money. It doesn't have to be gold and silver, by the way, although history shows that's the best so far. But just to go one step further, and thanks for letting me have these last few minutes, in the last chapter of my book, The Silver Manifesto, I actually questioned, do we even need money? Keeping open-minded, being a constant learner. Is there a better way for humans to interact? I mean, when you think about it, we're the only species that needs money, right?
Yeah.
The king of the jungle doesn't. The ants don't. The gophers and grasshoppers don't.
Right.
It's only us. So go back and do a quick thought experiment and go to, let's say, the Native Americans. They ran around with teepees and tents and bows and arrows, and they all seemed to get along just fine. They didn't have any money. So obviously it can happen in the human experience. And I'm not suggesting we go back to hunter-gatherer. That's not what I'm saying.
Right.
What I'm saying is we may need to rethink the system. Perhaps a reset is in order, but on our terms, on the people's terms, not on the elite banker terms. Because the elite bankers, in my studied opinion, are really the root cause of almost all of our problems.
Yeah.
You ask people what their underlying fear is, it has to do with money. People that have a lot of it, fear losing it. People that don't have enough of it, fear not having enough.
Right.
People that are in the middle, they're still fearful of it. Is it going to inflate away? Is it going to deflate away? What if I lose my job? So money plays a factor in our lives that transcends everything. And that's too bad in a way. When you're on a sound money system, you don't have those worries as much because the playing field's level for everyone. And a dollar 30 years from now will be equal to or better than the dollar today. So you don't really need financial planning. That gold is going to buy you the same amount of goods and services in 10, 20, 30, 40, or 50 years. Right. And that's peace of mind. Because if you want your savings to work, you want it to work. You don't want to have to stress about, well, the inflation rate's 7%, and I'm only going to get 4% of my T-bill, so how do I make up the other 3%? And all the stuff that goes on today.
I would love to have you back on. I think this is needed. This conversation is needed, right? And from somebody who's actually been in the market, has seen several cycles, have been thinking about money, thinking about sound principles of money. So I really appreciate you sharing your insights.
Audio, most of video. So you get all that information for free. We do have a paid service. Our team specializes in the resource sector. So it's not just silver. It's gold, platinum, lithium, copper. We're the first in rare earth elements. We talked about cobalt before it was popular. So we look at all the minerals. I do feature energy from time to time. And the editorial is written by yours truly. And every month for the last 24 years, I take a blank sheet of paper and I ask one question. How can I serve my members the best? And then I start writing. That's the editorial. So awesome. I'm still passionate about it after all these years. It's been good times and bad times, but I'm still having fun. I still feel good. And I really am on board with my mission statement. I really would love to see honesty from the top down and bottom up for all of humanity. If we had that, I think we could do away with a lot of the ills that plague us today.
Well, there's only one way to do it. We'll change few listeners at a time.
Very good.
Great. Thank you again, David. Appreciate it, buddy.
You're welcome.
If you got value from this episode, you might consider sharing this content with a friend. But most importantly, be sure to take action on what you've learned. One way you can take the next step is to connect directly with Socket on an investor call. That link is waiting for you in the show notes below.
The content of this podcast is for informational purposes only. Please consult your own advisors when making any investment decisions. Keep listening. We'll see you on the next episode.